Welcome to Turbulence, a special series on global finance and geoeconomics in an age of disruption. From All Things Policy, Takshashila's daily policy podcast. I'm your host, Anupam Manur. Money, in the end, rests on trust. Trust that the currency in your reserves will hold its value and that the system settling your payment won't be switched off on you. For as long as most of us can remember, that trust has settled on one currency above all, the dollar. Now, it's being pulled at from every side. Talks of de-dollarization, a rising renminbi, digital currencies and stablecoins, and new payment rails built to bypass the old ones. So, in this episode, we ask what the future of money actually holds. Is the dollar's dominance genuinely fading, or simply hardening into a more contested multipolar order? I have the perfect guest on the show today to take us through this. Barry Eichengreen of the University of California, Berkeley is one of the world's foremost economic historians of money and the international monetary system. If you've read an account of how the dollar rose to power, chances are he wrote it. His book, Exorbitant Privilege, is the definitive one. He's advised the IMF and writes a monthly column for Project Syndicate. And the timing of this episode could hardly be better. His new book, Money Beyond Borders, Global Currencies from Crisis to Crypto, takes on exactly the question at the heart of this episode: where money has been and where it goes next. Turbulence, Global Finance and Geoeconomics in an Age of Disruption is a special series of Takshashila's All Things Policy podcast. This series is made possible by the generous support of Zerodha. Welcome to the show, Barry. Thanks for joining us.
Happy to be here.
Barry, the important figure that everyone quotes about dollar is that the dollar's share of global reserves has slid from about 71% at the turn of the century to roughly 56% today, which is a record low. But the more interesting number is where that share went. Not to the euro, not to the yuan, but about 3/4 of it went to a scatter of small currencies: the Australian and Canadian dollar, the won, the krona, and to gold. You've called this the stealth erosion of the dollar. And you've reminded us that this has happened before. The US overtook Britain as the world's largest economy back in the 1870s, and yet the dollar didn't quite overtake the sterling as the leading reserve currency until maybe the 1920s or even later. For a long stretch, the two simply shared the job. So let me start there. Is what we are seeing today genuine de-dollarization, or is it more of a demonopolization of the dollar?
Up until now, I think it's been primarily the latter, demonopolization, as you put it. A very gradual movement in the direction of a more multipolar international monetary and financial system that I think better matches the more multipolar nature of the global economy compared to the situation right after World War II, when the dollar first became so dominant. But there are fears, there are worries, and I, for one, share them, that the process of de-dollarization could be changing and that we could be on the cusp, if you will, of a more dramatic move away from the dollar, because confidence in U.S. economic policies, confidence in U.S. foreign policies, confidence in U.S. institutions are all being dramatically reassessed. And that could lead to a dramatic reassessment of the global role of the dollar and more strenuous efforts on the part of central banks, governments, financial institutions around the world to de-risk by limiting their dependence on the greenback.
Right. Can we just bring in a little bit of flavor of history here? So that sets the context for what's about to come. What does history tell us about timelines and triggers? What actually ended Sterling's reign? Was it the two world wars, just decline of the British economy? Or was it, on the other hand, US institution building, establishment of the Fed in 1913, a deeper treasury market? So what were some of the historical triggers, and are we seeing any of those triggers today or a separate set of triggers?
Well, as I explain in my book, I will try not to use that phrase too frequently during our discussion. It was a combination of U.S. institution building and British relative economic and political decline. It was anomalous in a way that the United States had overtaken Britain as an economic power in terms of aggregate GDP already around 1870, and it overtook Britain as exporter by 1913, but the dollar played no international role because the U.S. lacked the relevant institutions for supporting an international currency. In particular, it lacked a central bank to act as liquidity and provider and lender of last resort to promote the growth of a market in trade credits denominated in dollars and sourced in the United States. So we created the Fed in 1913, and the Fed took as one of its first responsibilities to foster that market in trade credits. Britain suffered economic and financial damage as a result of World War I, but not such severe damage as to dethrone the pound sterling entirely. So the dollar and the pound shared the international stage in the 1920s. World War II was a much more expensive and destructive war from the point of view of the United Kingdom and from the point of view of the global British Empire. So Britain emerged from World War II immensely heavily indebted with a debt to GDP ratio around 250%, right, twice the burden that the US is currently shouldering, with what economic historians have called a zombie international currency, where sterling balances were still held by members of the current and former British Empire, including India, post-independence India, but those balances were blocked, couldn't be meaningfully used. So it was the fact that Britain was the sick man economically of Europe, and that the United States had moved almost a half century earlier to put the relevant institutions in place that led to this abrupt shift from sterling dominance, if you will, before World War I to dollar dominance after World War II.
Right. I'm not sure really why, but this happens to be one of my favorite kind of stories in international monetary history. And you do a wonderful job of just explaining this in your book as well. But I have a slight aside already. If Keynes had his way rather than White, would the world have looked slightly differently? Or was the dollar domination an inevitability?
I think a global role for the dollar after World War II was unavoidable. The US was far and away the largest economy in the world. It had by that time the deepest and most liquid financial markets, which were fully open to other countries, something that no other currency enjoyed. But if Keynes had had its way, the dollar would have been importantly supplemented, if you will, by what Keynes called bank gold, or is French for gold. Keynes was trying to appeal to the French government, among others. And I think that system, which would have revolved around the dollar, but also have revolved around synthetic foreign exchange reserves created by what Keynes called the clearing union, what today we would call the International Monetary Fund, in a sense would have been more stable and would have worked smoothly for longer than the system that we actually inherited from the Bretton Woods Conference in 1944.
Right. So back to kind of current day and even having a historical perspective, why is incumbency so sticky? That long duration between which the sterling didn't really go off. And now, is it network effects, inertia, or just the absence of a good enough rival?
I think it's network effects, that it pays to use the same currency for your international transactions that the people with whom you're doing business use. It is complementarities between the different functions of an international currency, that it is used by companies to finance payments related to imports and exports. It is used by banks for cross-border financial transactions. It is held by central banks and governments as foreign reserves. And these different elements reinforce one another. They complement one another, if you will. I don't think that the absence of serious rivals is enough to guarantee the indefinite dominance of the dollar going forward. There can still be a crisis of confidence in the dollar and flight away from the dollar toward gold, toward the non-traditional reserve currencies that you mentioned before. And there can be a global liquidity shortage if those alternatives are not sufficient to fill the dollar's shoes. But the persistence, the stickiness that you describe is real. It's a thing. And I think it's a function of network effects and the complementarities I described. One more word would be that maybe these network effects are growing less powerful over time.
Okay.
For many years, everybody used dollars because it was awkward to use anything else. Now we all carry in our pockets a device, a smartphone, on which you can get foreign exchange quotations, through which you can access platforms where you can trade dollars for South Korean won or Indian rupee or whatever you want to trade them for. So the fact that you might prefer to use rupee and I might prefer to use dollars, it becomes easier for us both to indulge our preferences than it was in the past when foreign exchange transactions were more expensive and more awkward.
Right, absolutely. You mentioned gold, so I'm going to just get on that a little bit. The Hungarian economist, and whose name I find sometimes difficult to pronounce, Zoltán Pozsár, his idea of Bretton Woods 3 basically says that the next reserve currency or a system would be commodity-based and especially gold-backed, which is born out of the kind of current situation of sanctions and fragmentation. I'm going to ask this provocatively. Why is he wrong?
Well, he's wrong because gold has disadvantages as an international money as well as advantages. So when I think about an international money, I think about the economist standard definition. Money is a unit of account, store of value, and a means of payment. So an international currency is an international unit of account. It's used to price oil and other commodities as an international means of payment and as an international or foreign store of value. Gold is not convenient for making payments. It's heavy, it's dense, it has to be secured. You know, it's held in the vaults of the Bank of England and the Federal Reserve Bank of New York, among other purposes, among other places. There's a famous story from a couple of years ago when Venezuela purchased oil field services from Iran. Iran sent some equipment and some people to help fix the oil derricks and the like in Venezuela. And Venezuela hired a couple of Russian 747s to transport the gold bars to Tehran in payment. So that kind of epitomizes how costly, difficult, and awkward it is to use gold as a means of payment. As a unit of account, it would be hard to price oil in ounces of gold or numbers of gold bars, the value fluctuating. So I think the idea that we're going to be moving back towards some kind of commodity money or commodity-based money, back to the future, if you will, I personally think is unrealistic.
Yeah, but does it surprise you, though, as much as it surprises me about how seriously this is taken, at least in some circles, where people are saying we're going to go back? I mean, that can be a very short answer, but
Gold has a strange fascination for financial commentators and financial speculators. It has a long history going back 2,000 plus years. Gold coins have long been an intrinsic part of the monetary system. It has a special allure in countries like India, where households have long seen it as desirable socially as well as economically. So it doesn't surprise me entirely. What I would emphasize, though, is that advanced country central banks had for a quarter of a century been trimming their gold reserves, selling them off to try to rebalance away from gold toward financial assets that yield income in the form of interest. It's emerging markets that did not inherit a lot of gold from the past that have been adding it to their reserve portfolios because it is safe from sanctions if vaulted at home. It is safe from the debasement trade if you think the United States is going to depreciate the dollar, that U.S. Treasury securities are going to lose value, et cetera. So I think it makes sense for emerging markets to move modestly in the direction of adding gold reserves, and they've been doing that. The main source of the increase in the share of global reserves held in the form of gold has been the fact that gold prices have gone up in the last decade, not that central banks have been actively purchasing gold.
Yeah. I'll back to the dollar. I'll spend a significant chunk of the time later in the episode on US domestic policy and how that might be hastening the kind of decline of the dollar, which is sort of your favorite hypothesis. I'll save that for later, but just on a slightly broader overview, almost every decade since the 70s at least, or even earlier perhaps, someone has been declaring the dollar's decline, and that has never come, right? So it's as much a cliche to declare the end of the dollar as it is to invoke, Mark Twain's famous thing, right? That the death of the dollar is greatly exaggerated. What makes it different this time from, for example, in the 2000s when there was a genuine belief that the euro will overtake everything and euro will be the reserve currency? So we've seen iterations of this. Is it really different this time? We can do the why part later, but is it really different this time?
I think it is really different this time. The people declaring the dollar dead, those warnings go back fully half a century. The famous MIT economic historian Charles Kindleberger used that very phrase. The dollar is dead as an international currency in 1976, after the Nixon shock of 1971, when Nixon suspended the convertibility of dollars into gold at a fixed price of $35 an ounce. And Kindleberger turned out to be about half a century premature in making that assertion. Exactly half a century ago, it turns out. I do think this time is different because the world has learned something new about the United States in particular. Economists have long been concerned about U.S. finances and about the U.S. Budget deficit and the growth of U.S. debts and so forth and so on. But what we've learned is that U.S. institutions are not as robust and reliable as we thought. That rule of law, control of corruption. We have massive corruption at the top now in the United States. Separation of powers, respect for the courts. These institutions are not as strong and reliable as American school children and voters have been taught for generations. And secondly, we've learned that the United States is not as reliable an alliance partner as foreign governments and central banks had been led to expect. So in my book, I talk about how central banks and governments like to hold and use the currencies of their reliable alliance partners. Doing that is a show of good faith in your partner. That partner is seen as a reliable steward, custodian of your foreign reserves. So if President Trump can go to a NATO meeting in Ankara, Turkey, and say, we really want Greenland after all, and we're going to take it by hook or by crook. The European governments conclude they can no longer rely on the United States. They have to build their own defense capability. And the old bargain, which goes back to the 1960s, where the US provides defense services to the Europeans, and they in return hold and help to support the dollar, that's no longer a workable bargain. So I think those two developments, that US institutions have been re-rated, if you will, and there's a realization that the US is no longer a reliable alliance partner. Those are new developments that really have the potential to change the outlook for the dollar.
Brilliant. Yeah, thank you. I'm going to go deeper into some of these things later on. But I want to come back to the kind of the analytical core of all of this. You did mention that money is ultimately a medium of exchange, a unit of account, and a store of value. So in the international sphere, this would probably come about, and not necessarily in the same order, but in terms of the reserves that foreign central banks hold, in terms of trade invoicing, which I think is far more stickier, perhaps. The dollar is still kind of used for invoicing a large majority of trade outside of Europe as well. And then finally, the international finance and lending. So it could be debt issuance, cross-border bank claims, and the entire dollar funding system. So could we break it down into these three layers and say, where is the dollar still strong? Where is it losing ground? And to what extent?
Yeah, so where the dollar is losing ground most visibly is its share of identified global foreign exchange reserves of central banks, and we've mentioned that already. Number two, the share of U.S. Treasury securities that's held by foreigners, not only by central banks, but by private foreign investors, hedge funds, foreign financial institutions of other types. That share has been going down as well. So it's not only official holders, it's not only central banks. And number three, the convenience yield that dollar treasury securities have traditionally enjoyed. So convenience yield is the phrase economists use to refer to the fact that the U.S. Treasury historically could place debt on the markets at a lower interest rate, at a lower yield than other governments could, because it was convenient to hold U.S. Treasuries. They were respected. The market in them was unusually liquid. They were used for a wide variety of financial transactions. That convenience yield has disappeared, and the U.S. Treasury now pays higher interest rates than a variety of other advanced country governments, and even an emerging market here and there. So that's the principal evidence that the dollar's international role is weakening or eroding. Where it remains the strongest, as you said, is in trade invoicing and in global foreign exchange transactions, where the dollar is still on one side of 90% of foreign exchange transactions worldwide.
So the idea of even there is an increasing amount of trade invoicing in non-dollar terms, right? Which is, it could be regional agreements, it could be between bilateral agreements between two countries in their own currencies and so on. So that is eroding the dollar's dominance at the margin, and even Chinese renminbi denominated debt has been increasing. It could be also because I think interest rates in China was slightly lesser than that of the US. I could be mistaken here, but I'm just asking you if that was factor to consider here as well.
Well, so that you allude to the fact that the data we have, the information we have on trade invoicing is fragmentary and incomplete. We strongly suspect that Russia invoices a lot of its exports in Chinese renminbi, and that it's doing more of its actual payments using China's currency, but we don't see that in the published statistics. So from the published statistics we have, the dollar is maintaining its share of global trade invoicing and trade settlements. We have information on the trade settlements through data that SWIFT, the Society for Worldwide Interbank Financial Transactions, the messaging system in Belgium, provides, but there are also other channels that SWIFT does not monitor or pick up, like China's own cross-border interbank payments system. So there could be more movement there in terms of trade invoicing and settlements beneath the surface.
Right. I want to bring in India here, and I don't know if I'm putting you on the spot, but India has been doing some of these bits, right? It has been slightly diversifying its reserves, it's signing more local currency deals, RBI, their reserve diversification. And for example, it's also done that special rupee was true account experiment. Some of these experiments have worked, some of it has not. But what do we take away from this in terms of, is that a clear enough sign that supposedly a long ally of the United States is also hedging its positions now, right? And we're seeing that, of course, in multiple other countries, but India seems to be a nice live case as well.
Yeah, India is right to hedge its positions and worry about US and dollar risk. I think that, India has moved to link UPI, its universal payments system, with the main European system and with other systems in Asia as well. I think where India can do more is in participation in the various experiments to create platforms where tokenized commercial bank deposits and central bank digital currencies can be used for cross-border payments. So there is a China-led project mBridge involving Thailand, Hong Kong, China, UAE, and Saudi Arabia. India probably doesn't want to go there because it would be awkward to be part of a China-led project. Yes. But there are also other projects. I think the best one is probably called Project Agora, which involves the Bank of Japan and the Bank of Korea, and then half a dozen advanced country central banks and about 40 commercial banks. Why isn't India part of that project? It's a big economy which trades with and will continue to trade with East Asia, Korea, and Japan on the one hand, Europe and North America on the other. So that would be an obvious way for India to say we want to be a player in helping design the international financial architecture of the future in collaboration with several other regions, not simply with the United States, or certainly not simply with China.
Right, definitely. Let's move on and spend a little bit of time on China and China's renminbi. Big question up front. I think this is the most obvious question. So really no genius. It doesn't take a genius to ask this, but there is a hard ceiling in terms of the internationalization of renminbi, as long as it has capital controls and non-convertibility in that sense. So can the RMB even be a true reserve currency while China refuses to open up its capital account? And of course, there's a trust issue. There's a deep issue of trust for holding the Chinese currency as a reserve currency, because there's a lack of rule of law, transparency is a problem, accountability is a problem, and all of this put together means that Chinese renminbi really cannot, at least in the near term, perhaps overtake dollar as the global reserve currency. It can, at the margin, increase its share, but is that the hard ceiling that it has?
I think you've answered your own question correctly, that the renminbi can play a somewhat more important role in global trade and payments, but it will not rival the dollar or even the euro in terms of its importance anytime soon, despite the fact that China is the world's leading exporter, and it's increasingly important as a foreign investor. So the renminbi now accounts for roughly half of China's own cross-border payments, but it doesn't figure importantly in the cross-border payments of the rest of the world. And it doesn't figure importantly in the foreign reserve statistics. So where the dollar is 56 or 57% of identified foreign exchange reserves worldwide, the renminbi is 2%. Part of the explanation for that is that renminbi reserves are not liquid, that if you hold them offshore in Hong Kong, they're liquid, but the pool of renminbi there is small. If you hold them onshore, if you want to actually use your reserves, you have to get the administrative approval of the Chinese authorities, who may grant it or not grant it, depending on circumstances. So as long as China continues to maintain those capital controls, and it will maintain them for the foreseeable future, renminbi reserves are not liquid. And if reserves are not liquid, governments and central banks will be reluctant to see their local banks and firms use the renminbi for cross-border settlements, because those central banks will not be able to act as renminbi lenders of last resort. The other point about rule of law and all that is quite right as well. So there is an irony here. When I have gone to China in the past, I get to go 1 or 2 times a year. Typically, I talk about this subject and I make the point that every leading international and reserve currency in history has been the currency of a political democracy or republic, where there is rule of law, separation of powers, checks and balances. And until there is such a situation in China, central banks will be reluctant to park a significant share of their foreign reserves in Shanghai. The irony is now we make the same argument about the United States that we have long made about China.
Yeah, the irony is strong there. What about developing countries such as India again here? At least from our point of view, as in the think tank that I work for, I think diversifying away from dollar dependence obviously makes sense. As everyone is doing, we need to hedge our bets. But we clearly cannot see ourselves going down the China path. We cannot promote the RMB and so on. So RMBization, if that makes sense, is probably worse for India than dollar dependent. So, and India also has its own convertibility issues. So while India has its own ambitions in terms of having a slightly more international rupee and so on, even India does not have capital account convertibility. So does it make sense in this situation for India to just hedge its bet across multiple other currencies, as you said, get on different projects, but also try and sign these bilateral treaties with other countries to get slightly, increased rupee trade and so on?
That's what India does in terms of its commodity trade. That's what it does in terms of its export of services. So it would make sense to similarly diversify in terms of international monetary and financial links. So there will be multiple sources of international liquidity and multiple reserve currencies in the future. Some countries may prefer to put a lot of their eggs in the China basket if they do a lot of business with China and they're geopolitically aligned with China. Other countries like India that are not geopolitically aligned with China may prefer the euro basket, or maybe the yen and sterling baskets on a smaller scale, or maybe some of these non-traditional reserve currencies, the Australia, New Zealand, Canada, Singapore dollars, the Nordic currencies, and so forth. All of these other providers of international liquidity and sources of supplementary reserves should be able in time to step up their game a little bit. The euro area and the European Central Bank can do more to enhance the attractions of the euro as an international and reserve currency. So given time, they will do that. Christine Lagarde has talked about the importance for the euro area to be more monetarily and financially self-reliant. How relying on the dollar is now seen as risky business. So the euro area will complete its capital market union. It will issue more safe European Union bonds. It will build more of a common defense and foreign policy, the things that are prerequisites for the euro looming larger in global finance. So if this transition unfolds over a period of years, I think diversification can occur smoothly, and countries like India that have no appetite for relying on China, but are willing to rely on other sources of global liquidity, their need for liquidity can be satisfied. If the transition is abrupt because confidence in the US and the dollar is lost tomorrow, then we're all in, collectively, we're all in trouble.
Right. In terms of, I understand the shifting more towards euro, yen base, maybe even Australian dollar, and having that kind of basket of currencies. But I am a huge skeptic of the much more regional agreement. So for me, for instance, the BRICS currency or talk about a BRICS currency makes very little sense. I'm also highly skeptical of even the economic framing of BRICS, because apart from it being a nice acronym, I don't really see it as a sensible economic grouping of any sort. Very wildly different kind of countries with very different nature of economies. One is export led, some others are not, and so on and so forth. I'm probably putting in my own bias here, but I want you to do the heavy lifting here. One, maybe this is an aside from the currency part of it, but does a grouping such as BRICS even make sense? Second, if it does a currency or a monetary project of BRICS, can that even work?
I do not think it makes sense, and I do not think it will work. So your prejudice and my prejudice are aligned with one another. It has taken Europe several decades now, to make the euro work smoothly. So Europe is a demonstration of the difficulty of having initially a dozen, now more than 20 countries share a currency when they have very different economic structures from one another. The heterogeneity within the BRICS grouping is even more dramatic than the economic and political heterogeneity within Europe, within the euro area. So I think the idea of a BRICS common currency or a BRICS currency basket that would function as an alternative to the dollar is social science fiction, if you will. And similarly, I think we have to move beyond talking about a regional currency for Asia, because Asia is such a heterogeneous place, economically, financially, and politically as well. After 1997-98 and the Asian financial crisis, we did go through a period when people thought all of the East Asian economies, not the South Asian economies, but the East Asian economies, had similar problems, similar structure, and needed similar solutions. An Asian bond fund, the Chiang Mai initiative to institutionalize currency swaps. But I think we've learned over time that different Asian countries differ, as I said before, economically, financially, and politically from one another. Some kind of Asian solution would run roughshod over the fact of that heterogeneity, and over the fact that Asian economies have links with the rest of the world, so they can't solve the problem of building international financial institutions at the regional level. They have to build them in cooperation with governments and central banks and other institutions in other parts of the world. That's why I find projects like Project Agora, involving, as I said before, Korea, Japan, and the Europeans and the North Americans, relatively attractive.
Absolutely. At the risk of asking a very basic 101 question, but just for the benefit of our listeners, there is a practical problem in terms of just these bilateral trading agreement in local currencies, which is, and this is, I'll take India's example with Russia, right? There is a surplus currency trap. Basically, India paid in rupees to Russia for oil, and Russia ended up with a lot of rupees that it couldn't spend because it doesn't buy anything from India. And obviously at that point, talks stalled. The entire arrangement sort of falls on its head. Can you see this pattern in different other such bilateral agreements?
Yeah, I think many attempts to negotiate bilateral local currency settlement have foundered on the same shoals, have broken up over the same rocks, that one country ends up accumulating the local currency of the other country and it doesn't know what to do with it, doesn't have any attractive purpose for it. So that's why there are multilateral trade agreements and why I think there need to be multilateral currency agreements as well. That bilateral solutions are, they worked in the 1930s when Nazi Germany could impose them on its subservient trade partners in Central and Eastern Europe. They tend not to work otherwise.
Yeah. Thanks, Barry. I want to move now to the plumbing of the international financial order. And here I want to talk about two different things. I want to first talk about SWIFT and then a little bit about crypto, because this is about the future of money. How much is messaging important? I mean, we understand SWIFT is the kind of the current backbone, at least, of global messaging systems for financial transaction, but that has also been eroding. And so how much of the problems with SWIFT hasten de-dollarization?
Yeah, so SWIFT is important because it's the way banks in one country communicate securely in a standardized fashion with banks in other countries. So SWIFT sees the writing on the wall that this interbank system as the basis for transferring funds across borders may well become a thing of the past with the rise of distributed ledgers and tokenized bank deposits and central bank digital currencies, and who knows, maybe even stablecoins, although there I very much have my doubts. So SWIFT is part of Project Agora that I talked about before. SWIFT is separately experimenting with blockchain as a 21st century way of sending messages that used to be were sent by carrier pigeon at the beginning of the 19th century and were sent by telegraph and telephone for much of the 20th. That kind of brings us to your second topic, crypto, directly. I think that distributed ledger technology, blockchain, is the relevant innovation here, and that it can be used as a platform for cross-border transactions where it combines the messaging with the actual transfer of funds all in one integrated digital system. And that will provide a new set of payments rails at some point in the future. And the question is, what will run on those rails? Will it be stable coins, what the Trump administration and U.S. business is betting on, or will it be tokenized bank deposits and central bank digital currencies? If I had to bet, I would bet on the latter.
Yeah, you've been a slight skeptic of stable coins will save the dollar sort of narrative as well. A lot of the stable coins are dollar denominated, and so therefore will that in fact increase the dollar strength, or will it reduce? So how do you think about that?
99% of stable coins in existence, in circulation at the moment, are supposed to be linked to the dollar. So if stable coins gain market share, if they gain popularity as a means of executing cross-border payments, in the short run, yes, that will solidify the role of the dollar. I would ask two questions about that premise, though. Number one, will stablecoins become the dominant cross-border monetary and financial technology of the 21st century? I've already expressed my skepticism about that. I think there may be more attractive alternatives. And secondly, the dollar's first mover advantage in the stablecoin sphere. The fact that dollar stablecoins are the first movers may not be as powerful in the future as people are assuming. I talked before about how I think network effects may be eroding over time. And if they're not that powerful, that will open space for Japan, which has a stablecoin ordinance, to issue yen stablecoins, and Singapore, which has a stablecoin ordinance to issue Sing dollar stablecoins, and maybe even China, which has allowed the adoption of a stablecoin ordinance in Hong Kong to issue stablecoins as well.
Right. I want to talk about CBDC. I'm not sure if you recall, but you've written a paper for Indian Public Policy Review journal that I edit on central bank digital currency for India. But apart from that, for many other countries as well, is CBDC a solution here? Is that solution in search of a problem, which I think some people tend to look at it. But there's two aspects: a CBDC for domestic purposes and a CBDC for sort of international transactions. So can you kind of unpack some of that for me, please?
There's the distinction between domestic and international, as you rightly put it, but there's also the distinction between retail and wholesale. So I would start with the retail versus wholesale. India doesn't need a retail central bank digital currency because it has UPI. It has one of the most widely adopted, efficient electronic retail means of payment. Everybody who wants to be banked in India can be banked and can use UPI. So that argument that countries need a retail CBDC for financial inclusion reasons, I don't think applies in India. But the question is, how can interbank payments, both domestically and across borders, be done more efficiently? So especially across borders, to do an interbank wholesale payment can take days and cost a significant fraction of the money that is transferred. And there, a central bank digital currency, which is issued to commercial banks and which the banks use for payments among themselves, both domestically, and if there is a project Agora or a project Mbridge that can be used internationally as well, that could be a significant technical advance and cost savings. So I think the RBI should be exploring a wholesale CBDC. It should be thinking more broadly about updating the Indian banking system for the 20th century, making it digitally competitive, making it a frontier banking industry in terms of its digital capacities. And I think maybe a wholesale CBDC could be part of that.
Yeah, absolutely. In fact, we've recently been arguing for exactly this, that as even a national security imperative, RBI should be looking at some of these options so that you're not beholden to the dollar and the vagaries of policies from the Trump administration or any other future administration. Barry, I really want to hear an economist view on this, because I either hear a technical, over-enthusiastic account of this or a skeptic's account of it. But I want to hear what an economist thinks. This is on the various crypto experiments that are run in different nations. It could be El Salvador, which, of course, went all in on crypto and then sort of had to reverse based on the IMF loans. Pakistan is recently now thinking about a strategic, or actually has passed now, a strategic Bitcoin reserve that might as well have to do with gaining favor with Trump. And then, of course, you have a country such as Bhutan, which has a lot of hydroelectric power, which is then using that for Bitcoin mining and holding as part of its state investment firm. Are these three entirely different cases? Is there a common thread? I have no clue. I'm asking you to, give me your perspective on this.
I think plain vanilla cryptos like Bitcoin are too volatile and lack the intrinsic flexibility that a central bank backed and issued currency possesses, they're too volatile and lack the credibility to function as money. I think stablecoins, if they are privately issued, their stability is yet to be proven, yet to be seen. They don't obviously display the singleness of money that the Indian rupee does. In India, every rupee is worth the same as every other rupee. In the US, every dollar bill is worth the same as every other dollar bill. But if we have Walmart coin and Amazon coin in the United States, and we have Tata coin and who knows what else in India, will they both be universally accepted at the same price, at the same value? In other words, will they function adequately as money? We simply don't know. So I'm a believer in blockchain. As I said before, I think there can be significant cost advantages and efficiency gains from adopting blockchain more widely for monetary and financial transactions. But whether Bitcoin, whether stablecoins are the units that run on those ledgers, I have serious doubts.
Perfect. Now we're going to go into the closing segment, but also perhaps the most important part. So I want you to take your time on this. My question is also going to be long-winded and elaborate, but please bear with me while I go through this. I want to talk about the weaponization of the dollar and the seemingly self-inflicted threat by the United States. So the story is, of course, I would look at the 2022 freezing of Russian assets as almost a pivotal moment in all of this. It changed the way that central banks look at how safe is the US dollar. And then a lot has happened domestically within the United States that doesn't necessarily inspire confidence. So I want you to tell me about some of those bits as well. But your main recent writings argue that the biggest threat to the dollar is not so much as external currencies, but internal domestic policies. So it could be what it's doing in the trade arena. It could be about, as I said, the weaponization of trade, weaponization of dollar, weaponization of SWIFT. There seems to be a lot of shooting oneself in the foot by the United States. Please elaborate this for me. Take me through the different policies and what is really eroding trust in the US dollar.
I do think that central banks and governments stood up and took notice when sanctions were imposed on the Bank of Russia at the beginning of 2022, and its foreign reserves, not only in the United States, but in a variety of other Western countries, were frozen. And that did motivate a search for alternatives to the dollar, ways of reducing dollar dependence. However, I think other factors have been much more important in terms of creating skepticism about the dollar and worries about relying disproportionately on the dollar, the U.S. correspondent banking system, and SWIFT, which come together basically as a package. And those other things are erratic U.S. policies, a public debt that seems to be growing endlessly and spiraling out of control, threats to the independence of the Federal Reserve System, which are not over. So late last week, Donald Trump renewed his threat to try to remove Governor Lisa Cook from the Federal Reserve Board over unsubstantiated legal allegations. I think those are basically the policy fundamentals that people are causing this search for alternatives to the dollar to really intensify and accelerate. And they have roots, as I said before, in doubts about the strength of institutions in the United States, the realization that there is rampant corruption at the top in the United States, that a handful of very wealthy individuals can shape political outcomes to their advantage, and then much of this reflects deep political polarization in the U.S., where the two political parties cannot agree on a solution to address the country's fundamental economic and financial problems. And finally, the increasing realization that the United States does not value its international alliances. So the fact of sanctions on the Bank of Russia in 2022 did cause governments and central banks to look around for alternatives to the dollar. But I think that this second set of factors is several times more important.
Yeah, we spoke about trust when it comes to China, as I think you pointed out even back then. But the trust in U.S. institutions is eroding. The U.S. courts are, famously, and I've never understood, as an Indian citizen, I have never understood how courts can be bipartisan. I've never understood the idea that you could have a Republican judge versus a Democratic judge. For me, that makes no sense. But the trust in US courts is low. The trust in US Fed right now is low because, again, there's political interference. So this does play a big role in the minds of people in terms of holding a reserve asset, right?
Right. Financial markets and monetary affairs rely on trust. They run on trust, and trust is a scarce commodity at the moment, unfortunately, when it comes to the US.
Yeah. So my question then, is this reversible? Is with the change in leadership, let's say a couple of years, new disposition comes in and settles down, and is it reversible? Can financial markets then trust the new dispensation? Can the new dispensation establish trust, and can dollar then regain its place? And this is just a small kind of black mark in history of the dollar.
I do not think that trust in the damage that has been done to trust in the United States and trust in the dollar can be fully reversed. So we've learned something fundamental, that even if more reasonable president, more reasonable leadership comes to power in the United States in 2028, there could be another president in 2032 who could move back in the other direction. And we've learned something fundamental about the inability of U.S. courts, the U.S. Congress, the U.S. media, the U.S. political system to restrain such a president.
Yeah, right. Final few questions, Barry. Stay with me. The dollar has somehow gotten stronger in every crisis. 2008 financial crisis, it actually got stronger. 2020, you had people scrambling for the dollar as a safe asset. So does a crisis actually strengthen the dollar, as we have seen earlier? And, if now you have this kind of specific crisis that's come up, we're having a much more diffused crisis, right? Not really a specific point, but if there is another crisis, will people still, because there are no alternatives, will people still run to the dollar as a safe haven? Or I know maybe I'm repeating my questions here, but just the fact that crisis generally tends to send this urgency towards safety.
Well, I think the Fed acquitted itself relatively well. The independent central bank intervened in 2008. It intervened flooding the treasury market with liquidity again in 2020. If future Fed answers to a unpredictable, unreliable White House, will investors still regard the dollar as a safe haven? The fact that the dollar has been regarded as a safe haven and the dollar has benefited from crises in the past is, I think, no guarantee that this will happen again in the future.
Okay. I have two final questions. Both can be quite short. All right.
I'm running on time, so I'll give you two more.
Yeah, okay. Give me a 10 to 20-year horizon. I know this is indulging in slight speculative territory, but what does the international monetary system look like, according to you, in, let's say, 10 years' time?
If confidence in the dollar is maintained, those 10 years can be used to build up the supplements to the dollar in the international sphere. As I described before, the Europeans can get their act together and the euro can become a more important source of liquidity in addition to the dollar. So can a variety of other international currency issuers. And the system 10 years from now will have rebalanced away from the dollar and have become more multipolar, where there are several currencies sharing the international stage. And I think that will be a healthy situation in the same sense that planet Earth benefits from a diverse ecosystem, that the international monetary and financial system 10 years from now will benefit from more diversity, a diverse set of providers of global liquidity as well. If, on the other hand, confidence in the dollar is lost tomorrow before other sources of global liquidity have had a chance to develop, the situation 10 years from now could be quite chaotic.
All right, perfect. The final question, and I have a small feeling you might not mind this too much, but folks who are listening in, Barry's latest book, Money Beyond Borders, Global Currencies from Crisis to Crypto, released in March of 2026. Barry, why should people buy this book?
Well, it provides a 2,500-year perspective on the questions that you and I have been talking about. For the last hour, we've been talking about sterling and the dollar in the 20th and 21st centuries, but the book goes all the way back to King Croesus 2,500 years ago with the invention of coinage. It tells the story of the people who've been responsible for the ups and downs of the global monetary and financial system that we've been discussing. So it's not only Donald Trump and President Xi who influence these things, but there have been colorful individuals throughout history, and it does think about the future and the role for crypto as well. So it's a much longer term, broader based, and I hope more colorful description of these issues than I've attempted before. And I should mention that just between you, me, and your listeners, I'm in Mumbai on July 31st talking about the book. So look for me there.
Brilliant. All right. Thank you so much for your time, Barry. This was a fascinating conversation. I really appreciate you coming on the show.
And it was a pleasure speaking with you.
Thank you so much.
We hope you enjoyed that conversation. If you're interested in public policy, AI, geopolitics, or defense, do check out the courses offered by the Takshila Institution. And for more conversations like this one, stay tuned for the next episode of Turbulence, Global Finance and Geoeconomics in an Age of Disruption, a special series of the All Things Policy podcast supported by Zerodha.